It's time now for today's strategy session. U.S. stocks poised for one of the best years in the S&P 500's history. But what can we expect for next year? Joining us now is Rob Hayworth, U.S. Bank Wealth Management Senior Investment Strategist. Good to see you, Rob. We were talking in our morning meeting this morning a little bit about, have we seen the best of markets so far? Has the markets, December markets tend to do pretty well, but are we just at peak here? I mean, I can't see where we're going to get more catalysts to move this market higher, but maybe you see them.
Well, yeah, I think as we turn the calendar, some of the things that have been driving us this year continue into next year. Things maybe are not as robust as we've seen in terms of economic growth in 2024. It may be a little slower in 2025, but the consumer remains strong. The labor market remains robust, and obviously it's a very important report next week on the labor market as we head into the Fed meeting. Additionally, right, the artificial intelligence story continues. We're seeing those benefits start to broaden out. As Jared pointed out, the cyclicals are doing better, and that trend has been happening post-election. And then the last thing I'd add is we haven't really seen the Fed cuts start to work their way through the economy. They're modest for now, but those cuts by the Federal Reserve, the European Central Bank, the Bank of England will start to provide some support to this global economy. So I think there's some room for improvement. Will it be quite as robust as we've seen this year? Probably not. But there is room for improvement into the new year, certainly.
And Rob, speaking of your purview being global and you guys looking at the global picture, given what you're seeing, are U.S. stocks still the best place to be when you look at stock markets around the world?
Yeah, that's a great question. We do still have a slight bias to the U.S., but we are seeing some opportunities, particularly when you think about the cyclicals looking around the rest of the world. Things are certainly more inexpensive if we look at Europe, if we look at Asia. Those markets have really not participated quite as much. So we think there's room for improvement there, and that's someplace we would look for investors to maintain a toehold. Right, they don't necessarily have to have a more robust exposure in those economies, but we would recommend people start to take a look around the world as we see more beneficiaries from rate cuts emerge.
Rob, I hear you on the AI trade. The fundamentals still look strong, but you look at some of the valuations on these names, whether it's a Microsoft, an Alphabet, they look frothy to the passer, just to the average investor. Do they look frothy to you? And then if you own these stocks, what should you do?
Yeah, no, it's a great question. They're on the high side, certainly. The thing that's really helped them, though, in 2024 and as we head into the new year, is earnings are following, right? We're on the high side of multiples, but not really frothy if we go back to, say, what we saw in the late 90s and early 2000 with the valuations there that were multiples on zero earnings. These are companies that have earnings and are growing earnings. Can they grow them as fast as they have over the last year? Probably not. I think it's tough when you're talking about the size of these companies that we're getting to continue these 30+% revenue growth paces. So the pace may come down, but those earnings are really supporting these companies, and I think that allows these multiples to stay on this high side, particularly because we're only getting started with this artificial intelligence revolution, right? We think this is going to play out over multiple years, so they may not be the best performers next year. I think it's always tough to repeat, but there's certainly some value here through time. We'd look for people to get more diversified in their portfolios. They don't need to just own these names. They really should start to look to some of the other beneficiaries in this economy, like that have not participated quite as much, including financials, healthcare, utilities, other things like that. But we think there's still more room to run.
Let's drill down on some of those other groups that you mentioned, Rob. Healthcare is such an interesting area because obviously it's quite diverse within healthcare. It's a big bucket. And the policy from this incoming administration, I don't know quite what people are expecting from it when you talk about those different areas. Is there one part of healthcare that you think is going to benefit more or at least be a little bit more insulated?
No, I think the challenge with healthcare is it is a security selectors market, and that's not something we do very much. It's a security selector, but there's value here, right? These are companies that have had a tough time in the last couple of years, and there's probably room for improvement. So we wouldn't narrow down to the industries within that sector for this moment, but we'd look more to securities because there's certainly room to run, right? And it's been tough for some of the recently for some of the pharmaceutical names, for some of the biotech names. So there's probably some values to be found here.
Gotcha. Rob, good to see you. Thanks so much.
Thank you so much.